Hey everybody, Jerome Maldonado, and it's Wednesday, and it's our Real Talk on Real Estate. We're running a little bit late on you guys today, but because of good reason, right? We are busy doing and facilitating deals, and people say, Jerome, it's such an economic time, at a time of such economic uncertainties, you guys are still underwriting deals. We underwrite deals all the time. In 2008, we were underwriting deals. 2006, 7, we were underwriting deals. 2008 and 9, we were underwriting deals. Out of all the years that we've been in business, there was a total of about probably 5 months that we didn't underwrite any deals and we weren't facilitating any purchases and doing nothing at all. We were finishing up an office retail complex in 2008, in like October 2008, all the way till the end of the year. And we had an office complex going up as well. So we had a $3 million retail center at that time and an $8 million office condo complex that we had going up. And then between all the way, and then we got into such an economic hardship in December of 2008, all the way to March of 2009, we stopped underwriting deals. But over the course of 25 years, it was only about that 5-6 months that we stopped. And that was it. And so people will sit back today and they say, Jerome, how does this war on the Ukraine and Russia really affect us economically? And so I want to go over 3 factors that we're going to get affected with. All of us. And I'll explain to you guys how we're underwriting deals. And in fact, the deal that we were underwriting today, we've been actually underwriting it for several days. How we're underwriting, I'm going to get out. There's a glare on there from one of the lights. But I wanted to go over with you guys how we're underwriting those deals. But before I go over how we're underwriting these deals, I want you guys to better understand how we're affected economically anytime the world is in uncertain times, which we are. When March of 2019 happened and the pandemic was released and COVID was going to control the world, well, we were in uncertain times. And we lived through that for a full year and a half, 2 years, right? Until now there's a war that's breaking out. Now you don't even hear about COVID. You don't even hear about the pandemic. Nobody's walking around with masks anymore. And so, in fact, I think we're lifting the ban on masks on March 17th with TSA, right? So TSA will lift the ban with masks, and I think you can fly without masks on as of March 17th. We'll see how that rolls out. But we're not talking about that anymore because the big topic of conversation is the war against the Ukraine and Russia and how this is affecting us economically. So if you think that it doesn't, you have something to pay attention to here, because it does. But it's how it affects us. And some people are irrational. So I don't do my research watching Fox News or CNBC. I don't do my research by watching the news publications that are rating sensitive, right? Meaning they need to excite the American people. They need to make sure that their ratings are high by bringing you the worst, the baddest news that's out there. I want real information. I want real information by real people, real analysts, real economic analysts on how this affects us. How does this war really affect what we're doing, right? Economically, how do we get affected by investors? Some of you guys that are working with us buying land and building houses are sitting back going, Jerome, do I buy land and build houses? What's going to happen? Well, let me tell you the reality of what's happening and what I would project the U.S., our U.S. political people, our president and the House and Senate, what I would expect and hope that they would do. And so we can kind of watch this unfold together, right? We don't have a mental intake of what's in their mind. We can kind of project what they're going to do. Right now, they're talking about not starting to produce and open up the production of oil in the United States and opening up the XL Keystone pipeline, which would resolve a lot of what's happening economically right now at the pump and in our homes with fuel, and also what's happening with housing. Because if we opened up the pipelines, it would increase economic growth in those areas with the pipelines and there's workers that are affluent. And then it would also create a need for more housing. Okay, now, indefinitely, this is going to create more inflation. Okay, hands down. So if the war continues long term, we will see more inflation. The question is why, Jerome? Well, because of import-export. So that's the number one factor, is import and export. So understand, people, when they think of Russia, they think of oil. And I'll tell you guys that Russia right now is allies with China, right? So we look and see, what is China going to do? Are they going to join NATO and the rest of the allied nations that produce the largest economic wealth in the world, like Europe and the United States? Or are they going to stay hand in hand with Russia? That's the big question. And so people sit back and go, China's big, right? It's a big area. But really, Russia and China together are only 3% of the global GDP. That means that the rest of us take care of the other 97% of the global GDP. So they're a very small piece of it. And Russia, really, their economic standpoint on the world is that of about the size of Texas economically. So not that Texas doesn't have a good economy. Texas has a great economy, but all of Russia's economy as an entire nation is only as big as that of Texas, the state of Texas, right? So when we sit back and we look at the economic effects of Russia, they're basically a large gas station with nuclear warfare. Okay, so to put it kindly, that's what Russia is. Russia's basically a large gas station with nuclear warfare. That's what they are. They don't really affect us economically. But what's happening is they do affect the European nation a little bit because what's happened is that those pipelines feed Europe. Okay, now because the Ukraine produces the largest amount of grain and natural resources that are being imported into Europe, that also affects commodities. And so what's happening is now food prices are also we're going to start seeing an increase in food prices as well. And so the US can really regulate all this just by opening up the pipelines again. Because if we start our own production of oil, well, our price per barrel would drop. And the production of oil here locally, which we have the resources to do so. And so hopefully, the Republicans are urging the Democrats to push forward on Biden reneging on his original shutdown of the Keystone pipelines and saying, look, Democrats, open up the pipeline again. Because we start our own productions, the cost at the pump will go back down for the American people. Plus, we'll stimulate economic growth because now there'll be more jobs available for people. And in those areas where there's an increased economic growth and there's more production of oil, what'll end up happening is there'll be a massive need for housing in those areas as well. So if we can urge the Democrats to push forward in that, it'll help us out in multiple ways. So number two is the impact of. So number one is the impact on import and export. Number two is inflation, right? So anytime there's economic uncertainties and there's not import export happening the way it's normally done through normal trade, there's a natural effect of inflation. And so because we're working with crude oils, fossil fuels, natural resources, everything at the pump is affecting freight. So airplane freight is higher. I was talking to a buddy of mine today where we're talking about purchasing an airplane over the next 12 months. A lot of people sit back and say, I've been having people tell me, Jerome, go buy a Lamborghini or Ferrari. I'm like, damn, I got Porsches in my garage and a garage full of motorcycles. I'll never drive it. I'm so damn busy. They're like, yeah, but it's good for social presence. I'm like, fuck, I don't care about that. What I need is something that's effective for me. And so I've been looking at airplanes this last year and the business behind the airplanes and how to make it work financially for us as a business. And a buddy of mine said, Jerome, in spite of oil prices going up, what it costs per hour to run the plane is about $1,300 an hour. It's going to increase it by $200 an hour, so $1,500 an hour. So it's a small margin of an increase to run that plane. And so the business behind it still makes sense. And so we've been underwriting this stuff, but it still affects freight because of everything coming in on planes, things coming in on boats, anything that's being transported on semi trucks. And so we're going to start seeing those natural resources increase. So there's going to be inflation of goods and services based on the fact that fossil fuels and what we're seeing at the pump is being affected by that. If we start production here in the United States again, we can easily accommodate for the variance in those costs. So that's the positive aspect that the United States has. Now, let's see here. Victor, China and Russia is only 3% of GDP. Yes, China and Russia is only 3% of GDP. And that's according to the National Association of Home Builders. And so when you look at that and you look at everything that's happening worldwide. We're looking at this from a standpoint, we get our research from reputable agencies, from the National Association of Home Builders, the National Association of Realtors, not Fox News. Okay, so we're looking at real economists. So when we're looking at real economists and we're looking at people that are looking at real financial standpoints for large corporations and large associations nationwide, and there's a non-biased interest, that's the information you want to utilize and hold on to. And that's how we depict how we invest, which I'll talk about here a little bit further into the video. But the third thing that's affected with war. So number one, import and export, commodities, oils, stuff like that. And then inflation, as we just talked about, is going to be affected. Okay. Now, the third thing is going to be equity versus bonds. Okay. So equity, stocks, the stock market, that type of stuff is affected. So typically investors, when the economy is rolling out really smooth, they like equity stakes. So they like stuff in the stock market, so they like taking equity stakes in companies like Walmart, like Coca-Cola, like Verizon and the towers and medical devices, Pfizer. They like investing in equity. Okay. Now, typically investors, when there's times of uncertainty, they move their investments from equity to bonds. And when that typically happens, that typically decreases interest rates by the Federal Reserve. Now, on March 15th and 16th, the Federal Reserve has their monthly meeting, and they're going to decide how we're going to move forward with interest rates. Are we going to continue in the standpoint that we were moving in, where there's going to be an inflation of interest rates? Well, I think that they may make some smart decisions and maybe not go up as high as we were normally anticipating 3 weeks ago, now that the war has broken out. They may soften that a little bit, which would make more sense so that they don't shit can our economy. And they have that ability to do so. Now, ultimately, over the course of time, in a year from now, I believe that the Federal Reserve is going to continue to increase interest rates, because that's part of their master plan of where they are and where we're moving and migrating as a nation, right? We're going to slowly see the increase in inflation of interest rates. Now, I believe that they're going to soften that, and they're not going to go as aggressive as we were thinking they were going to go, because we were talking about seeing either 4 to 5 increases in 2022. I think that the war is going to depict how that happens. And so if we start seeing investors migrate from stocks and equity over to bonds, I think we're going to see a softening of those increases over the course of time. Okay. So those are the 3 effects that war has on us economically. Now, how are we dealing with this? As you guys know, I'm an active living investor. I'm an active living developer. We have 5 different companies that I own, and we are immersed in the real estate, construction, in everything above sector. We own a real estate company where we don't do work for other people. We don't work on commissions. We only utilize our real estate company as a savings to be able to facilitate business on management of some of our retail centers and office complexes. And we utilize it to purchase a lot of real estate so that we make a kickback on our commissions. And then in our residential sector, we use it for resale so that we save on the commission. So it's more of a savings tool that we do. And also a kickback tool that we make a little bit more money on. And then we also have the construction company, which we've owned since 1998. And we do millions of dollars each year in construction for customers and for government entities. And so we sit back and we look at that. And then we build spec homes. Spec homes are homes that we build out. And once they're done, they're spec we spec them out, and then we sell them to end users. And so we don't have end users that are buying our homes until they're fully completed. And we're doing that in 4 states across the United States. And so we're building out a lot of units. Plus, we're working on our retirement portfolio and our long-term generational wealth. So we have a lot of multi-unit real estate, office and retail, which I started purchasing in 2000, which we still own today. We have some that was value add and some that we built with new construction development. And then we have a lot of multifamily. We have 2 value add properties that together equal about 155 units. And then we have new construction of multifamily, which accounts for about another 400 units. Plus we have another 104 under construction currently, and another 350 units that we're working on entitlements, and then another deal that we're actually working on tying up this week here in the Southwest. And so how are we doing this? And And why are we doing this? And how are we underwriting these deals? Well, this is important for you investors, okay? Taking into account everything that we have, the three factors that we have here, Jerome, why would you continue purchasing real estate in these uncertain times? Well, because if we look at the potential that the United States has, we're a strong nation in spite of what people think. Okay, I know there's a lot of fighting between Republican and Democratic parties, but the reality is that we're a strong nation economically, and we have a lot of natural resources here. We have enough natural resources of just crude oil to run our entire country and run the entire, all of NATO and the European nation for many, 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 many years in multiple generations. But we haven't opened up that opportunity yet. Now, when Trump was in office, the Republicans were running. They had the XL Keystone Pipeline, which is the largest pipeline in North America. And it was shut down by Biden when he came into office. And so it cost a lot of jobs, and it reduced our production of natural resources. Now, like I talked about early on in the video, if we open up that pipeline, we have the ability to produce oil here and drop those oil prices. And it'll actually help us out economically, because with the opening of those pipelines, it'll increase economic growth for jobs and higher level paying jobs, by the way. And it'll also increase our stock market for equity stakeholders in big companies like ExxonMobil, right? And all the other large companies, Western Refinery and all the other large ones. Now, in doing that, when those employees move to go into these areas like Wyoming, South Texas and West Texas, and down into New Mexico and the Dakotas, where this pipeline runs from north to south, guess what there's going to be a need for? Housing. And because we're allies with Germany and Europe and all the countries as part of NATO, here's what's good for the U.S. American people. Is that in prior years, trade with places, places like Europe and places like Britain, what happened is it was just too expensive to bring construction materials from those areas. Well, when you start seeing inflation of 40%, of 30% on lumber, and you start seeing year over year inflation of 20% on multiple years, now you sit back and go, okay, is it still not affordable to be bringing goods in from overseas in Europe? Well, now we might be able to go to Britain and say, hey, it's time. Let's go in and let's freight goods and materials in from Germany, from Britain, from all the European nation, and let's start getting stuff down at a more cost-effective price. These are allies of ours. So now the U.S. has the opportunity to negotiate trade with places that we can bring this in from our European nation and help us out here in the United States with reducing construction materials, which is what I think we'll end up doing. We'll start seeing over the course of time as this drags out over the course of time. And so you'll be surprised to see how this happens. Now, I mean, I look at this more so from an economic standpoint, how the Republicans do business, because, I'll tell you, I'm nonpartisan. When it comes down to it, I'm what you call a Republican. There's Democratic stuff that I always used to say that I agree with, but then there's also Republican stuff. But I'll tell you, as a business owner, I fight more for the Republican side of things because they affect me economically. And in all honesty, small business owners are responsible for 85% of employment in the United States. So understand that, with that being said, that I'm going to go advocate for the Republican parties. And so I'm hoping that there's an alignment between Republicans and Democrats here over the next few months, and that we start seeing that through our House and our Senate when bills are passed to be able to get some of these trade agreements negotiated instead of the battle that we've been fighting for the last 8 years between Trump and Biden and so forth and so on. Because if we can come in alignment together as a country and we stop fighting amongst each other between Republicans and Democrats, we can get so much more done. If we stop fighting and employing against the shutdown of the XL pipelines, and we really realize what this could do for our nation right now under these unforeseen times, it'll be such an attribute to our country. So anyways, That's how That's how war affects our country. One, we're going to see import-export changes for sure on commodities and oil, and we're also going to see inflation for sure. Hands down, we're going to start seeing inflation. Now, look, ladies and gentlemen, I'll sit down. I do this research. You like the information? Don't forget to pound that like button. Click and subscribe to our YouTube channel for more content just like this so you can join in and get notified when we go live each week for our Wednesday's Real Talk on real estate, and so that you can also get notified on up and coming trending videos that we're constantly uploading to YouTube so that you guys can see how we're underwriting our deals and why. Okay. So when we sit down, we look at this as a nation, we're going to start seeing some changes. The reason that we're still going after deals and we're still underwriting them is because I know we can. And so the way we underwrite them is I sit down with my business partner and say, okay, look, there's a good chance that there's going to be increased inflation. So if we're building an asset for $150 a square foot for increased vertical construction, let's underwrite this thing at $170 a square foot. Let's increase that by $20 per square foot for our vertical build. So we're accounting for inflation in a year from now. Okay. And so we underwrite it accounting for $20 more per square foot on our build costs. Increased premiums, right? Now, another thing that we're doing is we say, okay, what if this affects us economically and rents start to actually go down and cap rates actually start to go back up? And so if you guys don't realize how cap rates work, the cap rate of a property is the amount of money that you make in return on your money if you pay cash for the entire asset. So if you pay $1 million for $1 million asset and it has a 5% cap rate on it, that you're making 5% on that $1 million. That's the cap rate on that. And so as interest rates rise, then in your taking out bank loans, the cap rate has to rise with interest rates. Because otherwise you're servicing debt on your debt. You're servicing your debt with increased premiums with low cap rates. So typically, traditionally, as interest rates rise, so do cap rates go back up, decreasing the value of that property over the course of time. Now, we're seeing small margin variances, and we've seen such mass appreciations. I sit back, and so when we underwrite these deals, I say, okay, what if the market compresses by 10%? So when we're done with this asset, let's just underwrite it as if today we're at the height, but we're going to see a 10% reduction in that asset class, in rents, in values over the next year. So we increase our construction costs, decrease our valuation by 10%. And if the deal that we underwrite, doing it that way, still underwrites and we're okay with the returns, we roll with it, right? Because now we have the ability, we're looking at the worst case scenario with appreciated values of material goods. And if we work into a compressed market with a 10% fluctuation in a compressed market, and if the numbers still work and we're okay with those numbers, then we're sitting at a good place. Now, here's our best case scenario. Lumber prices and materials actually go down in price because we're seeing it such an inflated value. I think we're actually going to see more inflation here we're going to see it get worse before we see it get better. But if we see that stuff soften a little bit by the time we're ready for construction in a year from now on some of these deals, then we win. If we don't, we have it already underwritten to be able to account for that inflation. Now, if the market continues to grow and with inflation, typically the end users are the ones that land up paying for that inflation, not the business owners. All of that rolls downhill to the end user. So traditionally, when inflation happens, you land up seeing the companies absorb some of that for a short time, and then it results in the end user. So what's going to land up happening is the U.S. American people are going to land up seeing that at the bottom line. If we continue to evolve. And right now, economically, we're sitting at a really strong place economically, the United States is. And so when we look at how our economy is doing right now, we're really sitting well, even in spite of the war, we're really sitting well economically. So even if we compress a little bit, even at 10%, and as we see this unfold, the potential that we have is to land up having lower construction costs and increased values in excess of that 10%. So what if they just stay where they are today and they don't even go up anymore in spite of inflation? We're okay. And what if they continue to rise? Well, then we're even more okay, and we have the ability to make even larger returns on our investment based on economic growth and inflation of that asset. But even if it doesn't and it compresses by 10% and we get squeezed on both sides, we're still okay, because we've underwrote our numbers that way. And that's how we make the decision. And if the numbers don't make sense, and we walk away. We dust off our hands and we walk away. Okay, but we're still underwriting deals. Kyle and I sat down. We're sitting there crunching numbers. Last night, I'm sitting there eating dinner with a fork in one hand, trying to cut, and I'm sitting there with a calculator in another hand, and we're sitting down just running through numbers for about an hour. And at the end of it, we said, okay, let's get on the phone with the broker. Let's ask some last minute questions. And if everything works out and we feel like we can move forward on it based on what we just underwrote today and based on what the broker tells us tomorrow on these few questions, let's submit an offer. And so, ladies and gentlemen, don't feel pressed by brokers right now. Don't feel pressed by investors right now. Make wise, smart, logical decisions. Do them methodically over the course of a few days, a few weeks, but don't feel confined to being pressed. We're doing a 30-day due diligence where we can get 100% of our money back on any deals that we're underwriting right now in lieu of what's happening economically, right? We don't want to go in irrational and make a decision. We sign on the dotted line and then we're just screwed and we lose our money. We want to be able to still do continued due diligence. And we also have backup plans within those builds that we're facilitating to make sure that we're doing them logically. So how does the war affect us economically? It does. It does affect us. But if you listen to what I've talked about, and if you haven't, go back, pound repeat on the comment section saying, hey, I'm watching this on repeat, but watch the video from the beginning, understanding what I talked about in the beginning of the video to where we've evolved to right now. Now, some last minute questions, ladies and gentlemen. Biden canceled all new oil and gas leases the day before Russia invaded. Okay, Benny, USA. Victor, you might want to look at your numbers a little closer. I look at stuff just before we get on these videos, so you may want to look at that a little bit closer, Victor, and get your exact numbers. Because I'm talking about the entire world. They may have the second biggest GDP, but we're talking about the entire world, not just China itself. China and Russia, China and Russia together are only responsible for 3% of our GDP. Go back and do your research, I promise. I just looked all this stuff up just right before we started this video. And then Benny, U.S. Should start making goods in America again. Yeah, we should start making goods in America again. And we need to start getting creative on what we're doing, just like I'm talking about here. And let's see, Alfonso, I found your channel yesterday and subscribed. I'm 26 and hopeful will be a land developer in the future. Alfonso, if you want to be a land developer, I promise there's opportunity out there. Even through the 2008 recession, developing land continued to make us money. Now, not raw land, not just developing solid raw land, the way we do things, the way we do stuff that makes what we work well, what we do work so well. Continue following my content. And if you understand the business model, what we're doing, I promise that it's going to benefit you long term, because you'll learn what we're really doing in the real world. It's not like this pie in the sky bullshit that most influencers are doing. We're living it. We do it. We back it with what we do each and every single day. Duplexes are garbage. I'm not a huge fan of small developments like duplexes. Go with larger numbers. But if that's your barrier of entry, then do it. But move on to bigger things quicker, because bigger things are just as much work as smaller developments. Do you build walkout basements? I don't do a lot of basements. We've done a few of them, but it's not. But we do some drop level homes, but we don't do a lot of walkout basements. Most of our stuff is single family, single level builds. Sometimes we do when we're doing dense development, like in Washington State, we're doing 3-story homes, little cottage builds, really unique builds out there in Kirtland, in Washington State. I need a chimney. Build a chimney, my friend. Can't find a builder that will put a chimney in my house. Go to the yellow pages, go to Google, go to Angie's List. It sounds like you believe Factor 2 has a potential larger impact on cost of building materials than Factor 1. Yeah, I believe inflation is going to have a bigger effect than import-export. I think we have a means. The U.S., we as a U.S. population, we have a means to get things for less money. We just haven't implemented our tools yet. I think that, like I said, if we stop fighting amongst ourselves and we can bridge some agreement between the Democratic and Republican parties, it's not supposed to be the way our nation's not supposed to run in the bullshit fashion that it has been running in the last 6 years between Republicans and Democrats, right? We're supposed to support each other to a certain degree, but it's supposed to keep a balance economically. Democrats today are different than Democrats when, like, Clinton was in office back in the 90s. The way the nation has evolved is kind of ass backwards right now. We need to come in alignment as a country. If we stop fighting a war amongst each other in our own country between Republicans and Democrats, and we can bridge that gap, we have open opportunity here, ladies and gentlemen, to make what's happening currently between Russia and Ukraine almost non-existent. But we have to become in alignment between each other right now. And so you have to be able to fight that voice. We individually have to be able to go out and fight that voice, right? Stop fighting amongst each other and stop becoming, I'm a badass Republican or a badass Democrat and fighting amongst each other. And we have to become bipartisan and going, hey, let's work together as a nation to become and still be the greatest and strongest nation that's available to us. We have NATO. We have the best allies in the world. If we exercise those tools of import-export, it'll be a moot point. If we just exercised our own natural resources here in our own country that we have the ability to produce, it won't affect the American people. We can still continue on our business plan that we've already had set in place. The same business plan that we had with the Federal Reserve, where we slowly start to increase interest rates. Our economy is so solid right now, but we need the natural production of oil because we're beating up the American people. The American people, ladies and gentlemen, are getting friggin' blasted from all sides. Man, they're getting blasted on the housing market. They're getting blasted in the grocery stores through inflation, at the end consumers and retailers. And now they're getting blasted at the pump. And now they're getting blasted by their utility companies for increased fossil fuels. We're beating up the American people. We're increasing homelessness by doing this. And small business owners are getting beat up because they can only afford so much payroll, right? So as a U.S. nation, if we can come together between Democrats and Republicans and stop fighting like a bunch of little fucking babies, guess what happens? Our nation becomes fucking stronger, period. If we become a stronger nation. So stop fighting. Let's go back and let's do what the free enterprise system that the United States was built on. Let's exercise that together and let's open up trade right here in our own country. We have the resources right here in the U.S. to be able to create this. And then with our allies, import and export through our allies, ladies and gentlemen. That's what we need to do. We have that capability. I believe in my heart that the U.S. people will do that. I believe we'll migrate in that way, especially if this gets a little bit worse. And I think we'll be in an okay place. That's what I'm optimistic of. But I'm still underwriting deals super conservative because I don't know that. I don't have a crystal ball. I'm not going to sit here and tell you what we're going to do. I like to believe that that's what we're going to do because that's what I believe that our forefathers fought for when they went out and built this great nation that we all live in. That beautiful American flag that we should so proudly represent at every home now is now represented as like the Republican Party and Trump, which is stupid. It should be our nation, our great nation that we all live in, ladies and gentlemen. Stop worrying about what's happening out there. Let's go out and support our allies and let's take care of what's happening out there. And let's come in and make the United States the strongest nation that we've always been known to be. And if we do that, we have nothing to worry about. But we'll see what happens between that fight between Republicans and Democrats. It's stupid. Like I tell my kids, don't be fighting amongst brother and sister. We're a family. If we build each other up, we're going to get great places, just like good teams. If you look at sports, ladies and gentlemen, I live with my kids through gymnastics and other sports, and the fucking parents are a pain in the ass. They fight, and they put our kids against each other, and they fight. And I tell my wife, it's the stupidest thing in the entire world, because what people don't realize about great teams, the winning teams, when you look at the Super Bowl winning teams, when you go look at like in Los Angeles, and you look at the Rams, and you go and you look at like the basketball teams that win the national NBA finalists, and you look at all the great NFL teams that ever lived, it's the team together. They build and they build each other up, and they all rise together. When you're sitting in a toxic environment where everybody's fucking beating each other down and beating each other down and beating each other down, everybody loses. And the way the real businesses are built, the way real nations are built, the way real companies and real athletes and real sport winners are built is they all build and grow together. It's like a contagious effort. They all build and grow together. And then you build a badass community where you're unstoppable because in numbers, you have strength. Individually, you could be one badass, but if you're one badass and you're all alone, you're solo. You're worthless. You have to do it in numbers. When you create greatness in numbers, we all friggin' thrive. And that's what the United States needs to do right fucking now, is we need to come together, and we need to come together as Democrats, Republicans, and all that, let all that bullshit and bygones be bygones. And we need to build together to create a strong, solid nation. Because economically, if we do that, we're going to thrive and move through this in like flying colors, ladies and gentlemen, like flying colors. Period. Ladies and gentlemen, how can you get involved in mine and Ty's deals? We got a lot coming out, Ty and I haven't even talked about that. I'll be up at the ranch in Virginia next week with Ty, and we got a lot of stuff. Just DM me. Hit me up on Instagram, DM me, send us your information, and I'll tell you more how you can get involved with a lot of what we're doing. We're getting ready to buy some boutique hotels down in Miami and some other stuff that we have going on. So you'll start seeing Ty and I a lot together here over the next few months. We've got a lot in the works right now, and so a lot of good stuff. Anyways, ladies and gentlemen, how would I structure Dennis? That's over a whole different conversation. Keep following my content. I'll show you and underwrite my actual deals so you can understand how to underwrite a 200-unit multifamily apartment complex. We're doing it. We have 2 of them going up under construction right now, 2 under entitlement and 1 under negotiation right now on a piece of land here in the Southwest. I won't disclose where it's at until we actually secure the deal. And then once we secure it, then I'll tell you guys about it a little bit more. But anyways, ladies and gentlemen, thank you for joining me on today's Real Talk on Real Estate. Look, our topics are real. The information is real. And I'll tell you guys that follow our content, click and subscribe to our YouTube channel. If you like the information, give us a thumbs up. Pound and like our channel, and put some comments in there. Let me know what you guys think, how we can improve it, and other information that you guys want to hear about. Thank you guys. God bless you guys. And you guys go out and compound your success.